Good evening, good evening. Welcome to the live Facebook. As I'm gathering, many of you are feeling the festive holiday mood. Am I sure or not, right? Now, we are just, 1 or 2 days before the big celebration that is celebrated by all the Muslim all over the world, but also our Muslim audience and our friend who is watching us tonight. Thank you for your support, and I do know this is actually a more bigger event than last year, as the COVID is coming more or less to an end, that we all can go outstation, overseas, and balik kampung to see all our friends that we miss out. And I was told by the newspaper that the traffic is going to be very, very heavy. That's right, the traffic is going to be very heavy on the north-south highway. If you're going back to the south, or you're going to the north or to the east coast, right, do drive carefully. But you can always catch us on the Facebook or YouTube or Telegram. And also thank you for coming tonight. Nora, so drive Selamat Hari Raya, early wishes. That's right. I think the first day of Hari Raya is likely to be on Saturday. I think so too. Then that makes Friday is a holiday, and then Monday is a holiday too. All right, let's because this will be our last live Facebook before we break off for the Hari Raya long weekend, as well as Friday. I think Bursa is half closed or half day. I'm not too sure what's the event there. And also Monday will probably likely to be a holiday. Then we probably come back on next Friday. That's right. So there's no breakfast show coming out. So with that out of the way, let's talk about tonight, which I do find many of our audience, as well as our member and also some of our smart Robie users, are still stuck in a bearish mindset. Now it's kind of difficult because we've been in such a bear market since the Russian and Ukraine war that we have seen so far, right? So now I'm going to give you some facts, right, and the tips how to be ready right now, to test out a couple of trades. And of course, many of you would have already know our smart Robie has a green Pentagon that you can follow it very nicely. But I'm going to share with you some evidence how this new bull market is thriving. So for tonight, our agenda of sharing is why the bull market is underway already. That's right, it's underway already, and the evidence of the bull market at its infancy. Now, many people need a little bit of skill to really know that the bull market is on the way. So I'm going to share with you some of those facts. And I happen to be in the stock market longer than most of you, so at least I've seen how the bull market will really worked out in here. But I've been sounding since January, right? And those who've been following me on live Facebook as well on the breakfast show, you have known that I've been bullish since then, because last year we did see, of course, in the context of the US market, Malaysia has been sort of moving sideways for the last 6 years. So that's probably telling you where the KLSE are likely to move. And the US market has been ignored by many local Malaysian investors, and I'm sort of give you a couple of reasons why you should be interested in the US market if you are not already, and where are the trading opportunity by follow up it. So last week we were talking about the so-called the end of the US dollar. I hope you have watched some of those and some of my talks. As I said before, the end of US dollar has been overblown, and US has been the world reserve currency for a while. No doubt the BRICS, which is the Brazil, Russian, India and China, are using more of their own currency, and the market share has certainly dropped a bit more, but it will be a long way before the US dollar is replaced by the world reserve currency. Right now it's just because of the Russian-Ukraine war. This is ongoing, and many people turn to other currency other than US. And of course, people like Robert Kiyosaki is one of the biggest stock market doomslayer, because he invested a lot on gold and also on cryptocurrency, right? And he has this thing against the fiat currency in here, been proponing when the market fall, he asked people to buy. Now the market go back up to 30,000. He's still into it. So these are the people who usually look into the market and sort of give the fright of the day or the fright of the week, depending what kind of flavor is giving. And also we have this gentleman, many of you would know him for Michael Burry, another doomslayer, another forever bear. But this time, this January, there was a so-called on his tweet that he gave out a wrong signal to sell this year in January, as such that, you know, he was wrong to say and also in March, actually. He did say that in March, and maybe he felt that. But I think more important, all of us, especially those of you who are here, we really need to question the influencer, whoever is asking me, including myself. When I were to tell you to buy and tell you to sell, you need to look at the evidence and just not follow buta. I suppose that's why the education, you know, the green Pentagon, the red Pentagon are the evidence which actually look at the price and volume and how we look into the market in here. So some of these doomsayers starting to pitch, you know, they're starting to turn, just like Titanic, wanted to turn but turning very slowly. First they were bearish, and then now they say they are neutral, then they say they are wrong, and then suddenly they're going to turn bullish. By the time you realize it, or they decide to make the market already run, right? So we don't want that to happen, and that's why we want to ensure that you all know these facts before you really go into the market itself. And a lot of these many of these analysts are even from the big banks, especially in the US market, starting to put out, you know, statements like this. Market may ignore recession for the first time since 1945, and they're reversing a lot of their stance on the bullish market. So as the day progresses, you know, the coming end of April, May time frame, June, you'll see many of these media starting to turn. The reason why I say that, if you are always on the social media looking for news in the US context, these are the kind of news will be starting to turn. So it's important for you to be able to do that filter. Now remember, last week we talked about the ability to filter out, you know, all this information and the knowledge to be skillful along that set too. So now even there are some analysts in there talking about an 80 chance of recession amid of a crunch. You know, that's why we're talking in a recession crunch. This is where you park your money in here. So a lot of people are really going to this kind of really what we call stakes, and really changing their environment and changing their opinion in here. So it's important that we look at the evidence that presented, and that's my job tonight in here, to convince you to that job. Now, of course, we did talk about 2 or 3 weeks ago on the market, how potentially you see the water, you know, a cup of water, whether it's half full or half empty. It's all being what we call veggie, right? And there's always people who is super bearish, which is people like Michael Burry, this guy Larry McDonald. That seems to be, you know, on the right wing of the political side, especially in the US context in here. Then you have a bit of the liberal progressive, then who are the opportunists. And one of them is no other than this gentleman in here called Tom Lee, right? He said 6 reasons. And for me, I always want to side with opportunities, being on the danger zone, right? Yes, no doubt about it. You know, you really have to a fixation to the bad news in here. He said this was in March and 8. Okay, so now it's already April. Market started to go up in 60 days. 60 days is only 2 months. So by the time it will crash. But if it's not crashed, then what would they do? They say, yeah, coming soon. You know, that's the whole point of why I want to break it down to you and to tell you some of the people that you listen to are not more important is looking at the facts and the evidence. Now, Tom Lee, one of the opportunists, right? He did say that, and I do believe subscribe to some of the indicator that they have. And one of them, he did said that he predicted the rally will continue throughout April, which is really happening right now, and taking S&P 500 by another 4%, and forecast SMA would gain at least 20% this year. And I really think more of that because we have this seasonality of the stock market. Remember, later on the slide, I will talk about it. But what's more important is the 2 consecutive quarter of gain. We have the year-end gain, all right, and then we have the January gain, which is the start of the bull market. All right, so this is why he mentioned before we have 2 quarters of gains, and that is following the so-called seasonality. Then you will see a bull market is. Right. So one of the reasons why we saw why last year dropped so much, and I think I've shown this slide before is the Russian and Ukraine war did came in February last year. As such, food prices, inflation started to kick up, because of a shortage, lockdown, also in COVID, China in here. And the Federal Reserve was led by this gentleman in here, Jerome Powell, was very, very late to raise interest rate, right? By the time he did it such a pace and such a haste, right? The market actually fell more than it is. That's why we saw the 75 basis point in June, July, and August. That is almost a 3.5 basis point going up. That's why you notice, right? Even in Malaysia, our local bank Negara has been very hesitant to raise interest rate. Can you imagine if they raise 3.5% interest? What will happen to your bank installment for your housing loan and your car loan? Will almost kill you, isn't it? And that's what's happening in US. So because of that, there has been a shortfall of people able to pay their installment in here, and people pull back on their daily spending to sort of counter the high inflation rate here. Now, all and be gone, we saw the low last year when the market hits in July or August, because that was the peak of the inflation rate. And then since then, we have two interest rates. Now, much of what I've said this year, I've talked about one more interest rate hike, maybe likely to be in May, and then followed by pause on the second half of the year. One of the real reason why if the pause of the second is the inflation. Now, last year, December, we were at this point 6.45. I think many of you may have heard me say before. And then right now to March, it has dropped down to 5%. So you can see just on top of me here, as the inflation de-accelerate in here, where the inflation becoming more controllable, more moderating, and that's where the Feds will start to slow down interest rate. Now remember, last year, 2020, the market fell significantly is because interest rate was raised too fast and too quick. So that's one of the first point. So if you look at the interest rate, at the inflation rate in the US market, it's right now, it's almost close to 5% in here, and it's slightly well below the expectation of 5.2. So if next month, and remember, these figures are released every mid-month, so you can really catch them. Just type in Google CPI figures on the 14th or 15th, or maybe follow me on the Telegram and I'll start to announce them. As the figures come down, we can see the market go higher and higher. Now remember, last year I said before, right? The market bottomed down at June. Okay, remember the US market bottomed right on in June, and that also coincided with the inflation. And since July, August, September, October, it start to moderating, coming down. That's why you see that stock market also go up. It's fantastic, isn't it? It's not that difficult to see why people is predicting another 50% fall without looking at the figures. I think a lot of these people is already, sort of stuck in this what we call a stop clock. They don't look at the facts. They just sort of feel the figure like this and they say, yeah, I think the market is going to drop 50%. Right? So this is where we want to look at the facts in here and likely to pause the interest rate in here. Now also at the same time, we find that at the lowest point, and this is the index of the consumer sentiment in US, you can see way back in the COVID, the market fall to about 75, and then we have a nice rally in here. But when the Russian-Ukraine war came and the inflation, they were more and more close to about more than just around 50%. Now you can see the blue line here is a 3-month average, and it was right time where many people were bearish. So one of the good indicators to really look at it, when you see so many people, the media, the abang ade, those people on TV talking about it, especially if everyone is talking about recession, how is this going to be happening in here? The market doesn't work in that way. So when too many people who is bearish in here, this is where we are likely to see the market to turn up, and that's why the market is turning up. And right now, we don't even have a lot of people are paying attention to the stock market. That is why stock market is at the infancy period in here. Now, that's why if you are contrarian, and remember last week, we talk about all of us, and I hope to train you to be a contrarian trader or contrarian investor. What does contrarian trader and contrarian investor do? Do y'all remember? You want to pencil those in there? Contrarian trader and contrarian investor is people who are able to buy at the bottom, but there is a better way, because when you buy at the bottom, there's a lot of fear, right? You still need to wait for something. What is the other way? All right, give me a thumbs up if you feel that what I am talking today makes sense to you, and certainly some of the methodology we talk about will help you to thrive in this coming bull market in here. So that's a better way, and definitely the short answer is our green and red Pentagon. Now this is also from the fun fact sheet, and also look into the US market in here. Later on I'll talk about the KLSE market, right? You can see February saw a slight downturn in a lot of defensive stocks. Now defensive stocks are generally like Coca-Cola, what we call many of the energy, all right, and some energy stocks. We see consumer stocks. They are actually, coming down. When the market was really, in the downfall as early of whole part of 2022, you can see the orange one is started to go up. But for the first time, a lot of analysts is giving it a underweight, which means don't buy so much of those what we call defensive sectors, right? Defensive sectors, and this is the first time showing it, while the other sectors like cyclic commodities are starting to pull up. So this is where another evidence why many of the analysts on the talking TV in here saying that. Now this is the EPS. Okay, the EPS is important to see where is the earnings bottom out. Usually when the market has the earnings sort of stabilize, right, and then from then onwards the market will pick up. And then we have seen technology, communication services, industrial, material, right, and healthcare and stable. They are bottoming up, like forming a double bottom. Then usually once they form a double bottom, that will be the lowest. So anytime from then onwards, you will see the sector started to improve, and that's why we are seeing right now. Remember, I said before, a lot of time the stock market are ahead of the economic indicator by 6 to 9 months. For a start, we all know even the quarterly earnings are late by 3 months, isn't it? Because usually the market will run first, and then this is where smart money also take the opportunity to buy those stocks if they know the earnings has bottomed up. And we have seen that already in the Malaysia sector. What sector are we talking about? The rubber glove industry, right? We notice, right? The rubber glove industry started to peak and started to turn back up when we see Top Glove started to raise the average selling price. And despite that, many analysts say people to avoid the rubber glove, but rubber glove has not gone down and started to pick up. This is partly, I do believe, the EPS for this rubber glove industry is also bottoming up right now. So when it turned from red, losing money, to black, making money, that's where you see the fastest move of a lot of these stocks in here. And like it or not, your average investor people may not realize it yet. So you are watching it and you probably realize this too. So that's an important point. And also we want to look at the 5-year moving average, which is a really, really important point. The 5-year moving average of the S&P 500, one of the top 500 most valuable company, up. You can notice going back to 1950s, it's been on the red line. There are a few times it actually dropped below and been a sideways. One was that in the 74, 73 with the trade embargo. I think I talked about it. Then on the dot-com crash, here we have that also. The dot-com crash, 2000 to 2003. Then of course, who can forget the global financial crisis, 2008. But since then, it just poked through it on the COVID-19, just went down for a couple of months and then staying. Even this round, remember, we were looking at the Russian-Ukraine war and the inflation. It still stay above the 5-year moving average. Now there's a reason behind why it stays above the 5-year moving average, and we're going to be looking at that. Why do you think so? Can anybody tell me? Want to put a guess? Why do the S&P 500 stocks continue to stay above the 200-day week moving average, which is the 5-year moving average? And why is that? Now, this got to do with the earnings. Now, remember, ChatGPT, all right? ChatGPT just came out last year in November. And how much of an scene or landscape had ChatGPT changed the total how we view AI? And some people saying this threatening to the humanity because AI safety has not been engaged. And this is really one of the biggest changes that was viewed by Bill Gates since the invention of internet. And he said that ChatGPT will change how humans interact with computer, how interact with AI. Now, why this is important, you can see US S&P 500 earnings is one of the most so-called technology and innovative company in the world. Of course, US has been one of the forerunner in here, and one of the reasons they're always able to do that, if you're going back to 1890, invention of the internet, microchip, television, radio, and so forth and go on, and now SpaceX traveling in here, and it's also ChatGPT, is the ability to increase the margin. Now just think of it, ChatGPT, it does replace a lot of people, right? So now a lot of companies are looking for even, maybe hiring less because they can use ChatGPT at a better, performance, lower cost, and that again add into the profit margin of some of these S&P earnings. So going forward, many of the tools, even your Microsoft 365 eventually will have ChatGPT in here. Can you imagine you just ask him to do the PowerPoint for you? And you've seen some of the demo on YouTube. It can do it, and even Excel is one wonder. You have a spreadsheet, you can ask the ChatGPT to analyze all the trend for you, right? And even ask him to write report. Used to be you spend probably 3 or 4 days, now you can do it in 20 minutes. So that is increase in productivity, and that's why we are seeing many of these companies continue to innovate. And this is one of the reasons why we see that 5-year moving average continue to go higher and higher. And that's actually, to me, the reason why the earnings is the main driver of the US economy in here. Now, Tom Lee from Frontstead is talking about the 2 quarters that is turning a positive. When you see 2 quarters of positive return, that is usually when you feel like the bull market saying. Now, this is one of the percentages. They look at the percentages, that number of up days in the last 20 days. 20 days is referring to 1 month. Now, he is measuring it right now. Right now, he's measuring about 65%. All right, which means 65% of up day in the last 20 days. That means it's almost 2/3 of the month is update. Every day update, and that's feeling like bull market, right? You can't say that for the KLCI, but definitely for the US market you can. The KLCI, we are still have its own sets of problem, which I may, if I tell you the facts, you may be really disappointed in the KLSE, and you may just sort of ignore it a bit. But I do think that Malaysia is where we all live, and KLSE has still a little bit of excitement, maybe on the shorter terms, but on the longer terms, you need to be very, very patient, right? Now, the thing is that many average investors tend to listen to their favorite analysts rather than learning facts. Okay, so this is where we see a lot of what we call misinformation. Okay, the misinformation comes when people just tell me what you want. Is it market bullish or bearish? So we don't want that. We want all of you who is listening here has some sort of basic knowledge how to interpret this. If this thing happened, this is what I do. If that happened, this is what I do. Is that understandable? And that's always been one of my major delivery of this educational live Facebook in here. Rather than not just taking what it is, always question. Even what I'm telling you, you must always question too, right? And when you question, then the truth will come. When the truth comes, you will have the awakening of a trader and investor. All right, I think that's really all the self-realization that we all must go through in here. Okay, so the next slide here, I talk about the US S&P 1-year return after a bad year, which is, I think, just to remind many of our audience in here. Now, remember last year we had a very, very bad year, right? The S&P was down something between like 16%, right? If you go back to 2008, there was a global financial crisis, went down 37%. It's up 26%. 2002, which was the dot-com crash here, and then subsequently the market is up 26%, and also the trade embargo in the 70s where the market is up. All right, so this is important because it simply just tell you how the so-called swing between the negative years, which is 2022, and then the swing back to the positive year. So if you look above me here, going back to 1980s, we have the Black October crash, then the market rebound back. You can see this red, right? Then we have the dot-com crash 3-year, market rebound back. Then we have the global financial crisis, rebound back. Then 2018 was the trade war under the President Trump versus China here. Then the market rebound back. And then we have the inflation inflicted by the Russian-Ukraine war, and the market since that has pulled back. So you notice many times a lot of this big fall, we get a 30 and 40% up. So no surprises. Right now, the Nasdaq is up 20%. I do think that if the second quarter of this year, there's a pullback, go in and buy some, because this market we're going to be pushing up to at least 30%, how I see it here. And right now I know it's still early, right? And I'm looking at the seasonality of the market in here, showing you how bullish the market is going to be, because like it or not, by the time we come to the end of the year, we'll be looking at these statistics again. Now you look at the S&P 500, which is even more interesting. You can see one pattern: down year, up year, 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 down year, right? 3 year down, 1 year up, 3 year, this is down year, up year, down year, up year, down year, up here. So that is why when I invest, I try to invest in the longer term. Like you have this nice bull run, like 7 or 8 years, and another one we call 8 years. So right now we had one bad bearish year, which is 2022, right? So if you look at the law of averages, we might have another 6 or 7 years bull market to come. We do not know what is going to be happening. I'm sure many of you ask, Martin, how long? But you said before the Russian-Ukraine war will fight for another 3 years. Then you also mentioned Taiwan will be invaded by China and so forth. Yes, no doubt about it. All these things are what we call the stock market doomsday, will continue to, hog the headline just to keep you occupied and listen to them and probably persuade you to buy other things. But you look at statistically, we went through almost 70 years of the stock market. We went through the 1969 Cold War. Remember 1969, there was a Cold War. Market also come back again, right? Unless it is the end of the world, then there are talks about, Russian-Ukraine war and also Iran becoming the other pack. Then you got the Western and the NATO. Then you have a third world war. We went through that. There was a second world war. You can see second world war. It went through. Then in the 1969, 1975, we had the Vietnam War, right? This was the time for the Vietnam War, and you have the trade embargo, but the market rebounded back. As long as human civilization still exists, the stock market still exists, and I do think from the judgment in here, the stock market will survive and will prevail. The question is, will you survive by buying the right kind of stocks and be able to realize this sooner rather than later? Now this another chart here talks about the consequence of the new bull market. So if you look back on the last 2 quarters that we have, okay, we are coming to last 2 quarters. This is still currently, it's the start of the bull market. Currently we are in the first week, okay, of second quarter, I believe, right? 2 quarter gains. The last time when you have 2 quarter gain, there was a nice bull market in the year 2000 after the financial crisis, when the market dropped. You can see this was the inflation inflicted January to October. We have 3 down market S&P. So this quarter does look like it's pretty good, because we are looking at it from the negative side, and if you can see from here, this is definitely one of those reasons where you have to look at the facts in here, right? So we want to be looking at the facts to see how this market can stand, and by looks of it, this was the global financial crisis in here, and you can see 2 bull markets in here. I do hope that these stats will prove you away. Now, where are we right now? Now, if you look at the S&P 500, looking at the charts in here, first time it crosses up. Of course, in January, it did test. Usually, you'll test the 200-day moving average test and then subsequently break. Malaysia also did same thing. Later, we look at the next slide. It crosses the 200 moving average on the 23rd of January, goes back up, then the red Pentagon in here tested lower. This was the the interest rate raise of the inflation index. We saw this again, and then it crosses back to the 200 moving average, because there is a likely that Federal Reserve will pause interest rate in the second half of the year, or even raise less. Remember, we talk about the interest rate raise every January. Then there was another one March. Right, we had 2 already, and probably another one in May to fight inflation. That's where but the market expecting right now, we see above here, market is not likely to do so. But having said that, the market has really moved many months. It's possible that the market will go through a pullback right now. We can see here where you can turn red Pentagon very easy, because you have 3 upthrusts already, right? So on our KLCI side, this is our Malaysian side, our Bursa in here. Quite different, isn't it? We did try to cross over in January and February, but the monotone on it, the market continued to fall. I do think that this big fall was caused by foreign funds really leaving this market in here. But if you look at it, many of the reasons it should sustain KLCI to even retest the 200-day moving average, but unfortunately today you saw the red pentagon. So red pentagon already here. You can see after like 18 bars or 16 bars, market will turn, and right now the KLCI has turned red pentagon in here. So there was upthrust. You can see there was a double top here, another upthrust, which is a very, very powerful indicator to tell you how bearishness our KLCI market, or at least the Malaysian futures market, is going in. So right now, I don't think our market is in any way, unless we cross above the 200-day moving average, which is this here, 1450. Okay, there will be a time where the market can cross, but I just don't know what will be the catalyst. Could it be the state election, right? Or could it be something else? Or I don't know. Is it because the market is pricing in that Najib will be pardoned? Right, so all these things is remain to be very hard to judge in here. But right now, as long as the market, let me just move it sideways here, the KLCI remain to be bearish, and that's why we need to turn our attention to where the opportunity is. Now remember, right, for bull market, certainly for investor, we only make money when the stock market goes up. For trader, you can always short the market, or you can buy inverse ETF like they do it in US, or some other leverage product like the structured product. But for most cases like you and me, we want to be in a bull market, especially in the early infancy. So with that in mind, I don't think our KLCI market at this junction, after all, it had turned red pentagon already today, right? This market is likely to not go any up higher. Now, the only advantages, or I do see some potential silver lining, is perhaps our local technology stock. Now, this is the Bursa technology stock. This is XLK. So XLK is the US technology stock. So we may play a bit of catch up. You can see we are still down 35%. It has been here since then, since March, always almost 1 month. It's not going anywhere, not going down. You can see, just take a look at Inari in here. A lot of the markets analysts are still bearish, as they said that there is still a lot of supply in the so-called semiconductor. So it's such that some of these stocks just don't get the kind of momentum that is picking up, and it's not responding a lot of the external catalysts like the US Federal Reserve, the inflation rate. Our market is just dead. All right, that's what I want to say in here. Now, if you also look at the regional market in here, the regional market, if you compare, the first one is the China, right? China and US are like, the two biggest economy indicator. They are running up. So ESM is the S&P 500. 001 is a Shanghai. You can see they're pretty much close off. Then the second group is Singapore and Indonesia, right? Now, do you know that Malaysia is the fourth? We are number 4 in the ASEAN in terms of market capitalization. We have lose out, to Thailand. We have lose out to Indonesia in terms of the size. So number 1 is Singapore. Number 2 is Thailand. Number 3 is Indonesia. Number 4 is Malaysia. And then number 5 is Philippines. Right? So we can see, in terms of being in the market so much early in the 70s, our stock market really are losing to our neighbor, and it will continue to this down path because the number of retailers are getting less. As many of our younger generation are into cryptocurrency in here, the money that they be piling into the stock market is giving it less. So also at the same time, we are seeing the last 6 years of KLCI really moving sideways, pretty much dictated by the foreign funds flows. If the foreign funds don't come in, the market doesn't move. Right, and that's what it seems to be the ideas generating. So as more people learn about the opportunity, including people like myself, they say look for greener pasture. After all, you need to make positive return from your investment in here. And many of you already upskill your knowledge, right? Learning about a US market, learning about SGX market, or learning about Indonesia market, then you can do cross trading platform. That's why this is really something that I feel that very positive for our new generation of trader. Now, why divest to US market? Now, I've always been a big supporter of US market. I've been in there for more last 10 over years in here and definitely made a fair bit of money from a lot of stocks. Now, definitely one of them is is the size and liquidity. Now, many of the stocks when you buy in US, you should not worry. Now, there are people saying, oh, but one Microsoft stock is 280 US dollar. So how to buy one lot? One lot, they're referring to 100 shares. But do bear in mind, even you can use some of the discount broker in Malaysia, either Rakuten, UOB, you can always buy 1 or 2 shares. And pretty much they trade in the same way too. Or you can trade at the smaller cap stock, below $50, below $10 stocks. But that needs your better reading on those VSA chart using all the plugin in here. No doubt about it, right? And I said before, the US innovation continue to increase the margins, and that way, we've seen a lot of the companies do well, even I heard the news like Samsung is likely to replace the Google search engine by Bing, which is a Microsoft product in here, because how smarter Bing has become, and Google has been a Samsung default browser for some time already, the search engine for the last 10 years. But just one ChatGPT just came only in November last year, only about maybe 5 months. You can see that Samsung is turning to Bing as a search engine in here, and that's the kind of innovation that we talk about in here. And also diversification. Now in US, you can buy almost some of the sectors that we talk about in here, and many of them have liquidity. So diversification is definitely been a good thing. And also you can do a lot of those inverse ETF. Like you want to have a negative view about certain sector, you can always short it by buying an inverse ETF. Now also, like it or not, in the longer term, the US economy is one of the strongest and the highest GDP in here. Along the way, you've seen the S&P 500, which I shared with you early on, there have been ups and downs. But at the end of it, it's fairly predictable, isn't it? 1 year down, followed by what? That's right, 1 year up. Okay, 1 year down, 1 year up. So that way it makes it trading, investing much easier. And we really need to look at the law of big numbers, statistically looking at the whole 50 or 60 years of the US market, and you can see many of this is in your favor. Now, how to get started on the US stocks? Definitely many of them you can really use the green Pentagon, and of course those of you on Smart Robie, you can use the S&P 500. You can check out some of these stocks: Apple, Intel, Alphabet, Amazon, Facebook, Tesla, Berkshire Hathaway, Nvidia, JP Morgan, and Johnson & Johnson, right? So these are big household names that I think many of you would have known, and this is actually a good place to start. And for those of you who have bought Apple and still keeping Apple, congratulations. And all those of you who have Microsoft or even Teslas would have known, some of these stocks will definitely do much better because of the ability to create earnings from all this, yeah? And these are some of the stocks that I like and just turned green. Pentagon came out through our VSA screener in here, so you can check it out, right? Green Pentagon for US is Dick Sporting Good, DKS. You can see just turned green Pentagon in here, right? Which is a very nice company. You can check out the trading view and also look at the financial, what kind of dividend they pay. But this one, the FA, is pretty good. Smart Robie rating it out 5 out of 8. Okay, so 5 out of 8 for DKS. Next one is Marvell. I think this one is rated lowly, but the reason why I picked this because this one is a low, is a technology stocks, Marvell, and it has $40 over cheaper, right? $40 over in here, and you can see it just turned green Pentagon. And remember, the last few rounds, the 200 moving average was the resistance. This time, would it break through it? Let's check out tonight. And if the technology stocks were to pick up from here, this is going to be one of the late comers, and likelihood the market will pick up in here. Let's see, Marvell, and check out the FA also. In the so these are the US stocks that I like, has some sort of chart. And the next one is the RCL, stand for Royal Caribbean Cruise. Do you all know that one? Very famous, right? They have all these big crews. You can see they advertise on newspaper, also on the YouTubes, where they have all these big slider. Then you can do the what we call the parachuting, you know, the one gliding one. Yep, they have a lot of these, and also zip line, one of the biggest. Just Google Royal Caribbean, and you know, again, with the reopening of the economy, you can see market, you know, sort of, you know, hold back, and it pulled back a fair bit from March onward. And if what I said, it's good. The RCL, you know, starting at $64, you got a nice swing in here with a low risk, nice reward in here for RCW. Okay. So on our Malaysian front, not much. In the technology stocks, these already turned green. Pentagon already. For the US one, I picked those just turned. Maybe you can take a look at it tonight. For the Malaysian, is Kellington in here, building a nice base here. Low risk, again, a low risk. It should the market pick up, and from here, that would be great, all right? But usually after about a month or so, the market usually fall. But if he can hold above this 147, then the market's good. Now remember, the KLCI is not really pushing up. Okay, the KLCI and some of the finance stocks, the technology need to take lead. Definitely one of them is taking lead is Penta. But remember, Penta has been up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14 days has been up, and you all know after 14 or 15 days, Penta may pull back a bit. But let's wait for it to pull back, because the Malaysian market is not going to go up and run. That's why you want to really buy at a good support, enable it for it to move up. So those are my so-called pick on that. And if you have any stocks that you want me to take a look, feel free to pencil those in here. I'll be happy to look in there. And for the time being, I think these are the stocks that I like. So 5 things to do as a rational trader is it's important to pick up a lot of things that I talk about. You can always watch the old Facebook, live Facebook, and also our YouTube for some of the things that I talk about. And don't be overly emotional about the, you know, everything else. I think we have to keep things in perspective in here. Everything has ups and downs, you know, just like the market swing below where people really panic, right? And we saw like last year, June, July, that was really the market bottom. And I did say that. Check out some live AB in May, right? There was a market bottoming in here, and then the market turned back up. Right, the same thing right now. You know, right now, show you those evidence. The 2 quarters that move us closer to a beginning of bull market, and then manage your risk. Not all trade, especially like Salutica. After gone up by 500%, today I think finally come down, isn't it? Salutica. That's a one is. So a lot of time people say that, hey, you know, how come I never buy a stock like that? Those are what we call 1 in a million, unless you trade, you know, in front of the terminals in there. Else of the time, you know, by the time it run, you decided to buy the market turn, which is right, what, 20. I'm not too sure how much the market turned today on the Salutica. I'll probably take a look at it right now. Yep, this is where it was down 30%. Okay, limit down 30%. I think tomorrow will be another 30% down. Okay, all right. So this is usually the case is, so manage your risk. So if you have certain profit target, do take it. So keep in view for the longer term, especially we are talking about the US market in here. And then very important, the last one, if you go on to other Facebook or to TikTok, to other social media in here, even myself, always question what is the basis, if this person is bullish or bearish, what are the reasons. I presented my reason why I'm bullish or bearish, so you can really pick up from there onwards. All right, and you can get more of the US S&P 500 from our smart Robie apps, which extend to 4 markets in here. All right, make sure you download of it in here. So tonight we'll come to a summary, which is, you know, there's still a lot of undervalued and beaten stocks. Bottom fishing is available right now. We haven't seen the market start to run. Our Malaysian market is yet to prove that it will hold. I don't think our Malaysian market will go further down. No doubt we have a red Pentagon. We could probably get another 2 weeks, because now it's Hari Raya. Very likely the volume will be quite muted. Not until the Bursa reopen on Tuesday. Friday will likely be off. Tomorrow will be half-hearted. That's why we have a sell-off today, because many traders don't like the whole position over the long weekend in here. And of course, with the uncertainty of the rate hike, got hike, no hike in US, that's why people are leaving it. So it's important that you have the courage to stand out and understand the reward to risk. Just like I shared with you, the KGB was really one of those stocks. We have a low risk in here. Yep, we got one look at Star already run already. Learn how VSA timing works and lap time to make money. Be a contrarian. because it's less crowded also too. So with that, this is Martin in here. You can always follow us on our Smart Robie or Martin TF. We are the inventor for the Pentagon guided system in here, first and only. And don't forget to subscribe to our Telegram channel for all our news and things in here. And let's take a look at Star Media, right? Yep, Star Media already. Yep, this one also same thing. You can see it turned green Pentagon for a long time, and then finally only run up to 50 cents. So right now you have another 8% drop in here. So this one, I think those of you interested to buy, you do better if you short. You can short the market. Okay, you short the market, you see well how you perform. By the time you get interested in it, you really have to be careful. A lot of these stocks inside here. Green Pentagon, you follow it, right? It took almost 3 months before it started run. There's no in here. You can see all the while this stocks wasn't really responsive. There's probably some news coming up in here. There'll be a lot of stocks in here, especially if not touch it. This is the kind of stocks it's good to sit aside and then learn from it. Okay, any other stocks? Alright, if there's no other stocks, I'm going to stop here, keep it a bit compact to 45 minutes, and I'll see you all after the Hari Raya. So drive safely in here. Selamat Berhari Raya. Alright, to all our Muslim friends, and I'll catch you later. Thank you for your company. I really enjoy your presence. Bye bye and good night.